Some people say that we are still early, that Bitcoin and crypto is going up because of increased adoption. But that's actually not what's going on. When we look at the activity on the Bitcoin chain, at best it's going sideways. Potentially it's even declining. Have a look at this chart. This is the Bitcoin active address momentum. So we've got the active addresses in orange. We've got a 30-day moving average of those active addresses in red. And then we've got a 365-day moving average in blue. This is a very long-term chart starting in 2010. And in the first years, we saw more and more activity. We saw nice growth that then, interestingly enough, peaked in 2017. So that was when Bitcoin hit the 20K. Since that 20K peak in Bitcoin, the activity has not gone up, rather trended to go down. But of course, the Bitcoin price itself is now way higher. Yes, the activity is impacted by the attention on the asset, as in it goes down when we are in a bear market. It tends to recover when we are in a bull market. But even if you look at this from the 1-year moving average, the current level is pretty much the same compared to 7 years ago. The number of transactions did go up in the last 7 years, but that's probably due to the distortion of inscriptions. So there was this mass movement of NFTs on the Bitcoin chain, a bubble that has since then burst. So I wouldn't be surprised if the number of transactions stays at the current level for a while. This is probably just a short-term breakout. And even on the 1-year moving average, we now tend to see a decline since November of 2024. Now, isn't that fascinating how over time the price of Bitcoin tends to appreciate while the usage of the chain, the number of active addresses, the number of transactions is probably not going to grow that much more over time anymore. There are fluctuations, and we can see how Bitcoin's capacity sometimes gets battle tested. As in, we do see bottlenecking, we do see how sometimes the Bitcoin chain has problems keeping up with all of the demand. It happened in the year of 2017, it happened in 2020, and it also happened in 2024 due to the inscriptions. Now this is the total revenue or average fee to be paid for Bitcoin. So we're looking at the income of the miners relative to the fee. When the fee is shooting up, it's very expensive to transact on Bitcoin. And when things aren't heated, the fees are very low. When attention picks up again and more people want to transact, this is high. And so we've seen a collapse of transaction revenue whenever we started a bear market, and it tended to continue for around 2 years. So that happened over here. It also happened here at the end of 2021, and it continued until the beginning of 2023. And now it seems like we are starting again a time of very little activity. Now, when the number of active addresses is going down, then why do we see the transfer volume on the chain going up? So that's this chart. Right? We tend to grow in the transfer volume. So it's a question of how we measure adoption, how we measure activity. Is it the number of market participants, or is it the capital that's being moved? The capital that's getting moved is increasing. So what's happening here is that the capital that the average market participant uses is going up. Or to be more precise, it's probably the type of investor that's now engaged with Bitcoin that has changed. It might have been the individual hobby investor that maybe mined Bitcoin on their laptop a long time ago. Now that moved to the institutionals. Now Bitcoin became a real investment asset. Bitcoin has matured in a way that is not anymore a small allocation by the retail investor. It's now a major allocation by institutionals. At least this is where the journey is going. Now, instead of just looking at the active addresses, we can look at all of the addresses that have at least a certain amount of Bitcoin. So including the people that just buy and hold. And this, of course, tends to go up over time. It did decline once when there was the massive crypto winter in 2018, when Bitcoin went from 20K all the way to 3.5K. But outside of that, we tend to just see growth. Now, what is interesting is that this growth has halted at the beginning of 2014. And that was not due to a crypto winter. The crypto prices continued to rise. We went from 44K to above 100K. So the reason for the number of addresses gradually going down now is very different to what happened in 2018. This is not just people getting suddenly bearish on the asset. It's just the small investor that tends to take profit, while the big investor, the whale, is getting in. Here, let's have a look at those larger wallets. So the wallets that have at least 100 Bitcoin. That's what went up recently. The big money is getting in. The small money tends to take profit. This is a fundamental historical change. We've never seen this in Bitcoin's lifetime before. Now, how does this help us to understand the future price development of Bitcoin? What I always find interesting is that in the past, the short-term holders had quite a bit of impact on the price, and they still have to a degree. But I think that over time, this will reduce. The impact that the short-term holder, the speculative money, has on the price will go down. Have a look at the net spent supply by very short-term holders in red and by longer-term holders in orange. So the long-term holders sold a lot at 72K and at 100K. Now recently that we couldn't go above 111, 112K, it was mainly the short-term holder that sold. Now I believe a good reason for that selling is this resistance line. Again, the short-term holders aren't too interested in fundamentals, they're just interested in momentum. And interestingly enough, over Bitcoin's lifetime, those cycle peaks tended to align very, very nicely on this curved line. And again, we hit that curved line. And again, that's a potential reason for short-term holders to take profit. That's probably what was going on here. The long-term holders, however, they continue accumulating. So this is how much of Bitcoin supply is held by the long-term holders. The long-term holders tend to sell into a price rally. They tend to accumulate during a bear market. So we always want to buy with the long-term holders, we want to sell with the long-term holders. The long-term holders tend to make more money in crypto, right? When you have very little supply, when the price is high, and you've got much more supply when the price is low, that's exactly where you want to be. Now, currently, the long-term holders have, again, more supply. Let's just look at the recent past. They had a lot of the supply at 44K. They had much less of the supply at 70K. They had a lot at 60K. They had much less at 100K. And then they started accumulating again at around 80K. And now they've got more supply. They're not yet selling. The short-term holder is selling. They are depressing the price recently. But they won't depress the price forever, right? They are short-term holders for a reason. They are getting in at some point again. Here's another way to look at this. This is the long-term holder supply net position change. And again, long-term holders tend to buy when prices are low. Long-term holders tend to sell when prices are high. And currently they're in the market. Of course, this is rather short-term. This is active trading. We can also zoom out a little bit more. And the ideal time, of course, to always buy is when the market as a whole tends to realize losses. So when people sell at losses, when people are giving up, that's the time to get in. Unfortunately, we are not there now. And who knows if we're going to get there again, because the nature of the average Bitcoin investor is changing. This graph speaks volumes. The best is to sell when the market is extremely heated and to buy when it's very cool. Currently, we are warmish. We are not yet super hot. Really, the major driver of this current rally is the purchases by companies like MicroStrategy or by the Bitcoin ETF. And those purchases are extremely constant. And because of that constant buying, which has even accelerated since 2024, right? We used to take 4 years to get to 1 million Bitcoin being held by those various companies and the ETF, to then only take 1.5 years for another billion of accumulation. Because of that accelerated accumulation, the Bitcoin price hits new all-time highs. Adoption as a payment network is going down. Acquisition by small retail is going down. But accumulation by the big money is going up, and it's continuously going up. And so at some point, the selling by the short-term holders will be exhausted and it will be overridden by all of these purchases done by Michael Saylor and the ETFs. So yes, I do believe that at some point we will go beyond this resistance. And then very likely we could hit the 130, 140K in the immediate future. I talked about this in prior updates. Feel free to check out older videos on this channel, or feel free to just subscribe. I'm going to talk about this again in the future. Now, it's quite fascinating that most people take the hard route. Most people try to make money in crypto by finding the next asset that does a 10x return. The problem is that most assets don't do that. Most assets go down. There are a few assets that take a lot of the returns, but it's a market where the winner takes most. On top of that, we also have to be right about the macro environment, as in if Bitcoin goes up, then most altcoins go up as well. When Bitcoin dumps, comes, most altcoins go down as well. So really, I think there are smarter ways to make money. I think it's better to try to not focus too much on the macro. I think it's better to find price discrepancies where you don't have to find the few winners. Let me show you what I mean. What do you prefer investing in? Is it the line at the top or is it the line at the bottom? Now at the bottom, we see Bitcoin's price movement. So this chart starts in February 2024. And as you know, we have seen quite a bit of a drop during that time, a 30% decline after we're now back above 100K. But the chart at the top has much less volatility. During that time, it appreciated by more than 1,000%, while Bitcoin went up by only 115%. Or have a look at this chart here. This starts in November of 2020. And it went up by 9,000%. While at the same time, here is Bitcoin, it only went up by 500%. Now what I'm showing here with those charts at the top are actually not altcoins that outperformed the rest. It's not one of those few winners. Instead, we looked at relative valuation charts. So we looked at the Bitcoin price relative to a very poorly performing altcoin. Now I'm not saying what kind of altcoins this is, but in general, this is also a Bitcoin chart here at the top. It's just not relative to the US dollar, but relative to a very bad altcoin. Let's make an example. Check out this. This is PIF. PIF had a lot of token supply growth in the last 30 days. So here are the tokenomics of PIF. Over time, there's more and more supply hitting the market. Now, if demand doesn't grow as quickly as supply, the price should be going down. And as per tendency, that is right. So this is now the PIF chart. Now, PIF is an asset on the Solana chain. So let's compare Solana with this. The price didn't always go down. And that's because sometimes Solana rallies. And so PIF comes with it. Again, the problem with correlation, the problem of the macro environment. But when we look at that PIF chart, not in US dollars, but relative to Solana, suddenly we've got a much more stable trend. Now, this is not necessarily the trend we want, right? We don't want to buy PIF, but we want to do the exact opposite, right? We might consider buying Solana and betting on falling prices of PIF at the same time to then get the delta. So in the end, we cancel out the macro because we are long one asset. We bet on rising prices of one asset, in this example Solana, and we're betting on falling prices of the other asset. So in this case, PIF. So overall, what the overall market is doing when it's going up and down, it doesn't matter to our portfolio because one thing tends to go up, one thing tends to go down. The only thing that matters is the relative performance. And then we've got very constant declines. Or if we now flip this chart, if we don't look at PIF relative to Solana, but we look at Solana relative to PIF, we get our nice growth charts. So this is now a more than 500% increase. And again, it's much less volatile compared to buying Solana directly. So this is, I believe, the easy way to make money in crypto. It is a bit more complex than just buying a random altcoin, but in the end, we have the odds in our favor because again, most altcoins tend to go down because the supply expands over time, and we are also hedged against the macro. We don't care if Bitcoin and Solana go up or down because we go both long and short at the same time. We can have a very constant growth this way. And here is what I mean with constant growth. This is my portfolio development since I started trading this long short strategy. The maximum drawdown was 5.67%. The equity is 36K and the growth over the span of roughly 2 months was 11K. Now, the most important thing here is not necessarily how much this grew. That's of course nice. But what I really like is that the drawdown was so low. We don't care about the macro. We don't care if things currently go up or down. All we care about is pricing inefficiencies. And so think about it. Do you want to buy a lot of different altcoins hoping for the one moonshot that might make up for all of the losses that in the end might never come? Or is it maybe better to just continuously grow with very little downside? I think the latter is better. If growth is predictable and if you can manage our risk properly and if you can make money independent of the market situation, we've got something that's much more valuable than just trying to find the 10x that might never come. Now again, this strategy is not as straightforward as just buying an altcoin on a centralized exchange. We do have to learn a little bit, but I actually made a video just on that topic. You don't have to watch every single video here, here, but the one at the top, that's the most important one. Using perpetual futures on Hyperliquid to bet on relative valuations. It's 34 minutes after you've watched this. You should understand how to do all of those setups. How to bet on charts like this or how to bet on charts like this. And how to have the odds in our favor, right? With all of those red bubbles over here. And again, be independent of the macro. It's the constant growth that's really attractive. So again, here's that tutorial video. It's part of the premium membership, thebitcoinstrader.com. And of course, I also share my own trades. For example, over here, I shorted WorldCoin recently. WorldCoin relative to Ethereum. So we're betting on Ethereum to outperform WorldCoin. So that was on the 23rd of May. I'm sharing this because this position is now closed and I closed it on the 28th of May. And so in the end, when you've got the right risk management in place and you put on some leverage on the position, you can make really nice gains. Here was the Hyperliquid chart at the time. So it already went up a little bit since then. But yeah, people are making money with this, right? This is not just me cherry picking the data. Here, have a look at this. This was one member that made some money with the WorldCoin short. Another one over here and here and here. Thanks, Gerhard. The premium membership paid itself already. And so that's in the end the fundamental idea, right? It's about making consistent gains. It's not about buying random lottery tickets, hoping for the one salvation trade. So feel free to check it out. It's currently $125 per month. It used to be 165, but currently the attention on crypto is comparatively low. Once all the tourists enter the space, I will of course raise the price again. Right now, if you sign up today, then you will lock in that price. So everybody that signs up now will not get affected by the future price increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. There should be a link to premium directly over here. You just click on that card and it will lead you directly to the sign up page. See you over there. Cheers.